Robinhood accounts are often set up as margin accounts, which let you borrow money to trade with more leverage but higher risk. Switching to a cash account limits you to trading with only the funds you have, reducing risk. In this video, we'll show you how to switch and why you might want to. A margin account allows you to borrow funds from the broker up to 4 times the value of your portfolio to amplify your trades. This can lead to higher returns, but also magnifies losses, and interest accrues on borrowed funds at rates around 8 to 12% annually. The biggest risk with margin accounts is margin calls, where if your investments decline and your equity drops below the maintenance margin, typically 25 to 30%, the broker can force sell your assets to cover the debt, potentially leading to losses exceeding your initial investment. In contrast, a cash account limits trading to your available settled funds with no borrowing allowed. You avoid debt, interest charges, and margin calls, making it generally safer, especially for beginners. Pattern day trading rules apply, restricting frequent trades on smaller accounts. Margin accounts offer potential for 25% annual returns, but with high volatility and risk, while cash accounts provide more stable 18% returns without the debt burden. Cash accounts are recommended for most investors to avoid the amplified risks of borrowing. First, open the Robinhood app on your device. Then tap your profile icon, usually located in the top right corner of the home screen. In your profile, look for the settings icon, typically represented by a gear symbol. Tap it, then select Account, and find the Trading Type option. In the Trading Type menu, select the Cash option. You'll need to confirm this change by tapping the confirmation button that appears. Before the switch can complete, make sure to repay any outstanding margin balance. This might require depositing funds or selling assets to cover the debt. Once confirmed, the account switch usually takes 1 to 2 business days to fully settle. During this time, any funds from pending trades will be held in escrow. Before switching to a cash account on Robinhood, any outstanding margin debt must be cleared. You have 2 main options: deposit funds through an ACH transfer or sell assets in your portfolio to cover the balance. For example, if you have $10,000 in margin debt, you need to either transfer that amount or sell enough assets to cover it. Once the debt is fully settled, typically within 1 to 2 business days, you can complete the switch to a cash account. The primary reason to switch to a cash account is risk management. Cash accounts prevent you from incurring debt and facing margin calls, which is particularly important in volatile markets. Recent trends show more users opting for cash accounts to prioritize stability over leverage, especially after events like the 2021 GameStop squeeze and 2022 crypto crashes. This shift reflects a growing preference for conservative trading to avoid the risks seen in these market events. The GameStop saga in 2021 serves as a stark reminder of margin trading risks. Many Robinhood users on margin accounts faced margin calls during the extreme volatility, leading to substantial losses that exceeded their initial investments. In contrast, users in cash accounts were shielded from these debts and forced liquidations, allowing them to hold their positions without additional risk. A real example from the 2024 market dip illustrates this contrast. Amid a 15% decline in major indices, margin traders faced forced liquidations as their accounts fell below maintenance margins, amplifying their losses. However, a trader who switched to a cash account beforehand preserved their $50,000 investment, avoiding the liquidation that margin users experienced. To understand why this happens, consider how margin calls work. When the value of securities in a margin account falls below the broker's maintenance margin requirement, the broker issues a margin call, requiring the trader to deposit more funds or sell assets to cover the debt. Financial experts like Suze Orman recommend cash accounts for most retail investors, emphasizing the dangers of gambling with debt. Surveys show a majority of financial advisors recommend switching to cash, particularly amidst AI-driven market unpredictability. Trading in cash reduces risk of bankruptcy by 50%. Looking ahead, Robinhood is developing AI-driven personalization that could automatically switch user accounts based on their trading behavior. For instance, if a user shows patterns of high-risk trading, The system might suggest or even auto switch to a cash account to reduce potential losses. Regulatory changes are pointing towards stricter margin limits. Current rules allow up to 4x leverage, but proposed federal rules may cap this at 50% of portfolio value, potentially reducing it to 2x or less to prevent excessive risk taking by retail investors. The industry is shifting toward promoting responsible investing through enhanced financial literacy tools. Experts predict a 40% rise in educational resources by 2026 to 2027, with Robinhood partnering with nonprofits to help users understand trading risks. Additionally, there may be a gradual phase out of high leverage retail trading to encourage more sustainable investment practices.